Hi, this is Dawn Brown from DB Tax Solutions. I hope everyone's doing well. I wanted to show you today what a standard deduction is or itemized deduction. When I'm interviewing clients, new clients, they ask me about certain deductions and try to ask back if they understand what the distinction between itemized deductions or standard deductions. So I want to show you that in this video. So I'm going to share with you an example. So first of all, the prescribed rate by the IRS for standard deduction in 2022, for example, for singles, $12,950. And for 2023, the new rate is now $13,850. And so it goes for married filing jointly, and there's a different rate for married filing separately, which is the same as single. And then there's head of household. So these are the prescribed rates by the IRS. So in this tax return that we have, this is a single filer, and this person has a $30,000 net income in line 8, and that is all the income. So in line 10 just kind of shows you a deduction of deductible part of his self-employment tax. So overall, his income is $27,881. Now, he would be taxed here, but the IRS is saying, okay, we're going to give you some flat rate deduction. If you're single, your deduction was $12,950. So that would go over here on line 12. This person is going to do an itemized deductions, and I'm going to show you because it's higher than the $12,950 that prescribed by the IRS. Because this person, for example, this is all an assumption. This person had $15,000 in medical expenses. $12,909 of it is deductible. And then we scroll down further. This person has mortgage interest expense for $7,000, personal vehicle tax expenses for $600. And this person also has charitable donations for $7,000. So overall, his itemized deductions, his mortgage, medical expense, property tax, etc., is $27,995. So it's a lot higher than what the IRS is giving us a standard. So in this scenario, you would itemize because it's more beneficial for you. So now we take that $27,995 total of his itemized deductions, deduct it from his total income above $27,881, you come up with a negative $114. So this person does not have a taxable income, as you see in line 15. However, on a tax return, if you look at it on the far left, there's a federal tax due of $4,315. So you're thinking, okay, so it's taxable income is zero. Why am I being taxed? And the tax here is zero. But the $4,315 is coming from his self-employment tax. So there's no federal income tax, but there is a self-employment tax, which is Social Security, Medicare, and all that. Okay, so that's where that tax due is coming from. So if you have a business, you might want to do estimated tax payment if you have net income for the year. So you're not running behind on taxes. It's recommended that you do quarterly payments. So anyway, we're going to get back to standard and itemized deduction. So we're going to go back. So we're claiming a itemized deduction. So we're going to go back to the itemized deduction. Say this person only has $1,000 medical expenses. Okay. And then, so zero, because of his rating, the zero of it is deductible. And we still have the, let's see, the $7,000 of mortgage up here, $600 in vehicle tax. And we're going to reduce the donation to, let's say, $4,000. So that brings us down to $12,086, which is lower than the standard rate. So $12,086, and here it actually gives you an option to choose itemized deductions even though they are less than your standard deduction. Now, why would anybody choose that? Because obviously the standard rate that the IRS is giving is $12,950 is higher than this amount. But the thing of it is, sometimes in different states, when you itemize in federal, you have to itemize in the state also. So if you use a standard deduction in federal, in some states you are required to use standard deduction also. But sometimes when you're so close to that threshold of going under or above the standard deduction, sometimes it's better to choose the itemized deduction, even though it's lower than the standard rate, because then you can elect to itemize in the state return, which is sometimes gives you a higher deductions. And what you might lose in federal deduction might gain twice, 3 times, or 4 or 5 times in the state return, because their itemized deductions that they give you according to what you're claiming is higher. So for this instance, it's 12,086, which is lower than the standard deduction. So this was 2021. So I'm using the 2021 software. The rate that we looked at earlier was 2022 and 2023. So in 2021, the standard deduction is 12,550. So in this scenario, what's left of the income, 27,881 on line 11, up above, minus the standard deduction, is left with 15,331. So that is the taxable income. Okay, so his tax here is 1284, which is the federal income tax. If you look to the left, the federal tax due is actually 5,611. So 5,611 minus 1274, the 4,337 that we saw earlier in the previous scenario, which comprises of the self-employment tax. So majority of the tax due is the self-employment tax. So in this, what his taxable income in line 15 of 12,265, the tax rate is only 1,274. So that's what the standard deduction is and the itemized deduction is. So you kind of have to look at what your filing status. A lot of the times when it's married filing joint, your standard deduction is actually pretty high. So if you have very low mortgage interest and you don't really have a lot of medical expenses, so a lot of people just use the standard deduction. So you don't even have to bother about collecting mortgage interest or property tax or vehicle tax and things like that, because you'll just use the prescribed rate that the IRS gives us, which is better. And a lot of the times the software will choose which one is more beneficial to you. But again, when it's close to that threshold, you might want to look at what benefit you might have on the state side if you were to claim itemized, even though it's a little bit lower than the standard deduction, because perhaps it might give you a higher itemized deduction on state. And again, it varies from state to state. So that's what standard deduction is. And that's what itemized deduction is and how it impacts your tax return. Hopefully this helps you understand a little bit with those terms. And again, this is Donna from DB Tax Solutions. Until next time with more tax information.